points on the list. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down. All right, what's up, Chad? They had a group on Lambo Rentals, so gonna make you a POV type video. You know, you get to see what's going on, where we're at. Nah, I was just messing with you guys. But if you have seen any of these videos, I just kind of realized that I make one of these driving videos every 3 months or so. And what I want to talk about is my financial warning for 2021, or really what to do or how to look about it. Because again, if you look at the videos I've made in the last 3 months here, we started the year off talking about the best investments to make, and that's where real estate, value stocks, and even crypto came in. That video was in January. 3 months ago, I kind of gave you guys an update on the inflation situation, and that's what we're going to talk about a little bit here too. And I even want to talk about economics. That's why I said we could tie it into this video quite nicely here. So we talked about inflation. I brought up kind of the state of everything, why I decided to buy Roblox, and then now fast forward 3 months, we are here in June 2021, and really I have a very important warning I need to go over. I don't know what you kind of call it. What I even want to say to you here is that inflation is already here right now. It is not going anywhere. It's not that it's coming. It is already here right now. You are already experiencing it. A lot of people don't realize that inflation takes a lot of time. It is quite the phenomena, but it is not like a shooting star. It's kind of more like the seasons, and that's why, you know, when I'm looking at the videos we've been making over the last year, and you kind of see how every quarter has brought along something new and how it's played out. If you guys have been paying attention, I really want you guys to be able to understand how you're going to be able to profit off of it. But really my warning is how pivotal this moment is and the opportunity that everybody has right now. I genuinely believe, like from the bottom of my heart, that this is one of the best opportunities for people to really build true generational wealth. And why I say that is because everybody is really going to have an opportunity. This is something, when you see inflation, when you see what's happening with the budget, and you see all of this stuff, yeah, you can make your own assumptions about it. I even have my own opinions towards it. But at the end of the day, when it is all said and done, the money is out there. There is money floating around in the system right now. It is easier to get your hands on $100 bill today than it was this same time last year, and then the same time 2 years before that. And even better, a lot more money is on the way. So I really hope everybody takes advantage of this. But now this is why I'm kind of saying it as a warning here, because the actions that you make moving forward, every investment and how you go about investing, you got to understand these waves and cycles of inflation. And if you understand that, you'll be able to make good investments, but focus on certain quality, because when it's all said and done, you are going to look back at this time frame. Your kids may even look back at this. Maybe you have a kid today and they were just born a couple years ago. You know, you really think what they're going to say about the price of things, but not only the price, but what it was 18 years from now or 15 years from now. And like I'm saying, and why I'm bringing this up, because you haven't seen money like this in a very, very long time. Again, 6 months ago when we made that video, we were talking about more money since World War II, and that is already here, and it's getting even bigger. So my big warning here is to really pay attention to what you're investing in, but at least have stuff that you want to hold. Again, holding assets and stuff that outpaces the dollar, that is going to be key. But if you've noticed by now, at points it gets really high, and then things have even cooled down a little bit. You know, everyone's like, wait, buy assets, buy all this stuff, but then you take a look at some of the growth stocks, it's like, wait, how are they getting hurt by inflation? But I thought inflation makes the prices go up. This has to do with those cycles and pricing, because it's not like buy all the time. Obviously, you got to be strategic about it, but holding is going to be the key. And like I said, with real estate, it even goes down to stocks. That's why you got to be careful with margin. It's all about what you can hold and what you can hold for a very, very long time. So there is going to be times when stuff is going to be too much. It doesn't mean you could just buy everything at a high point. And that's why if you start understanding how you've already seen inflation play out, we have data now, and then we're going to get even more, you are going going to be able to look ahead a little bit and see there is going to be moments where different assets at different times, commodities, real estate, crypto, stocks, value, growth, they're going to move in stages and waves. And then from that, you'll see as the market kind of freaks out to inflation, adjusts to it, maybe says everything's better, doesn't care about it, and then other data comes and then it goes there. These are going to be the waves of inflation, and it's going to happen about like every 3 months or so. So that's just the intro to all this. I think I'm going to make a long video here. I think I'm going to talk about a lot. So hopefully you stick around if that's the case. But I want to talk about some stories I had with some people and how this compares to even like 2010 to 2013, and then even 2007 to 2009. And then obviously I've already brought this back and related this to the 1970s. So I want to talk about that. And then I also want to mix in a little bit of the global effect and talk to you guys a little bit about currencies and how everything is creating an interesting scenario now, and you could see these waves in other places as well too. So let me get driving and backed out here. I didn't think that would take that long talking to you guys with this. I'm excited about this topic, so I really hope you guys are too, but hold on here. Okay, we're on the road. So I want to talk about the cycles first and understanding these inflationary cycles and when you're going to see them. Essentially, you're going to see inflationary cycles every 3 to 6 months. And now this is because of how data is reported and digested, but what I'm trying to say is that every 3 to 6 months, you are either going to notice more of the effects of inflation just in your business, other industries, prices of cars like we've seen, stuff like that, or you are going to hear about it just like you have where all of a sudden you saw the growth stocks move, you saw the value rotation at the beginning of the year, but then people didn't start talking about it until they got the data and the bond yields and everything started going up too. So that is what I want you to keep your eye out here for, because essentially every 3 to 6 months, these are going to be your little triggers and how to watch it. Now, you got to watch the Fed, and that's important. That's why we were talking about CPI versus PCE. Remember, CPI is just the popular one, but the actual data that the Fed uses is going to be the PCE. But now, what I'm saying is the Fed is kind of going to be your guideline. A lot of people don't like to put too much faith in it. The Fed has been wrong in the past, and they can be, but that's why I'm saying tie this into everything. You got the Fed, you got the data, and then you got the market and how the market talks about it and discusses it. So what I'm trying to say here is that every 3 to 6 months, you are going to have an opportunity to kind of see the state of inflation investments and then be able to plan ahead and judge the prices where they're at and decide, okay, this seems like a good deal, this doesn't, or this is what we're expecting. So keep that in mind, because that's what you've seen me do. Again, I've been giving you these videos every quarter, but the situation has changed. Again, we now know a lot. I was speculating, all this money since World War II. Go look at the video I made in January. I'm talking about the 3 best asset classes, and it's based off of this inflation stuff. And then sure enough, what happened? Those assets kept going up. It indeed came to fruition, but then by March, April, May, June, that's when we made the Roblox play. And that's what I was saying, well, inflation's kind of hot now. Everybody was talking about it. And then by that point, you started to see those growth stocks come down, because now it wasn't that inflation was bringing asset values up. People are saying, wait, if we really do get inflation, this phenomena does persist, that means we're going to see higher prices. It's going to hurt margins. It's going to hurt those debt companies, or the companies with a lot of debt. And don't forget about that right now, because this ties into pretty much the next thing in the overall warning that I'm making here. And that is to make a good investment. Really, what I'm trying to say with all of this is that a good path is a good path regardless of anything else that's happening. There's an objective decision, or there's objectively good. Treat your neighbor as you love yourself. I love this concept, right? But that is objectively good. It doesn't matter what society you're from, where you're from, your background, anything. You could generally see, okay, yeah, treat people good, treat them how you want to be treated. That will usually yield a good response. Buying certain investments, some companies with genuine value that have been here for a long time, those are going to be good regardless. Yes, we talked about crypto, and there's opportunities for crypto to go up a lot. Okay, hey man, hold up. But I was saying, even if you see crypto and there's a lot of big gains there's a lot of these new technologies and companies, can you make money with them? Yes, and very well. Some of those may very well emerge to be some of the leaders in the next decade, and that's awesome. And my approach is I'd rather be late than wrong on it. But what I'm trying to say is that some good quality investments, no matter what return is being offered in the marketplace right now, you're still not going to go wrong buying certain quality things. And really, what I'm looking at with all this inflation stuff, and last time we've seen this, and this is why I'm tying this back into history. A lot of this is new, but a lot of it rhymes very, very well. And one of those instances is 2010 through 2013, and it was under the Obama administration. And go look at some of those companies, and I encourage you to go look at value stocks, and really any company that did good under the Obama administration that was already existing 10, 20 years before the Obama administration and was able to exist afterwards. You know, these big name companies that we all know about, even like GE or Ford, and you've seen that recently, even IBM, 3M, some of these companies. And again, this is just off top of my head. There's a lot you could dive deeper in, and sure, you guys post some, but those are the ones that are going to do good. And that's where you're seeing the whole value argument and everything going on with that. So there's going to be a lot of opportunity, some stuff over the next couple months. Again, think about all of these cycles, and now I think those cycles are going to continue for a decade, or at least 5 years. Again, I'm judging it in 5-year blocks, but like I'm saying, you want to look back and what are you really going to be owning? You want to own some of these quality names that when it's all said and done and this phenomenon of inflation continues to persist, these are going to be some of the assets that you wish you could own, that it's just going to be too expensive then. There is going to be a lot of shooting stars. There's going to be stuff that goes up and down, but just a reminder that going with stuff that is going to be solid or has already been solid, that is going to reward you very, very well when it's all said and done. And this really, really applies to even real estate now too. But the warning here is that a lot of people in these next few years, this is an opportunity where everybody can get rich. I really do believe that. Even Joe Biden saying this is where it could build out the middle and you could start from the bottom and do that. I really see when there's that much money in the system, you can. The usual problem that ends up happening is you have freedom. You end up doing whatever you want with it. You see how culture and society is today. You see the shooting stars. You see all these different opportunities. It's what people end up doing with their money and time. And that's why I'm saying, if you even want to speculate, you could always set a budget for it. You could always set a little bit aside, but make sure you're getting most of the team, most of the squad is doing the real investments that are going to be holding it down for you. Or at the very least, just making the most of your time. You know, actually making sure you're invested, involved in the game and doing what you need to be doing, because this is a real opportunity where people could do a lot. But there's a lot of people partying right now. There's a lot of people taking their money. They're exploring new businesses. Some people are going to be the new pioneers of technology. Some will succeed, some will fail. Some people are traveling. Again, there's a lot of pent-up demand, and you even see it. People don't even want to work. I was surprised. Even Lending Tips said this on his live stream. He was talking about how this is probably one of the best times to work because you can actually get paid a lot. You know, $15 minimum wage, or now even some places. We have somebody, he owns a very big company. He owns a big restaurant. This guy actually helped me with my first house, and he even is saying he has trouble hiring people at the basic level of his company at even like $20 an hour. And Lending Tips was just telling me he worked at Taco Bell back in the day. He was making $4.95 an hour. So it's crazy, but you know, Lending Tips is a little bit older. He got to live through some of these other cycles. And like I'm saying, 2009, 2010 through 2013, that was one of those cycles. And he even said the same thing. You know, a lot of people, after the real estate market crash, people didn't really want to do anything with investing in general. They gave out stimulus checks, but people used them for other things. And the last thing people were thinking about was real estate. But, you know, I got into my first house flip around that time. I was a lot younger. I was more ambitious. And I see that in a lot of you guys here too. Because if you have that in you, you could make a lot of cool moves here, and it is going to benefit you greatly. Or even then, in Lending Tips situation, you know, he's over a decade older than I am. He was still able to use that 10-year period to go from Taco Bell to now having his own lending facility. But even then, the results depended on what you decided to do with the money. Even Lending Tips will tell you stories that even early on, he spent a lot of time. And this is why you don't need a FOMO, because even from my life, even seeing his life, the other mentors I have and the other people I've seen, you are going to make mistakes. If you really had to FOMO all the time, a lot of people I know, myself included, would have never had any success in all this. But you're gonna make mistakes. You're gonna waste time. You're gonna put money on different stuff that you're going to look back and be like, damn. But it's all about getting a couple of those quality investments that will really do the work and making sure you're in the game. You know, I hope a lot of you ultimately keep your peace and stay relaxed, cool, calm, collect. You got time and you don't need to worry, and really whatever happens, it's not going to define you. And that's the beauty of this opportunity. So I hope I encourage you to be wise with your money, be wise with the chances you get. And even then, some of you are really, really hungry. You got a great opportunity. You could put in a lot of work and do a lot, but even society, you're not going to see everybody on the same page. Even 2010, 11, I'm making my first house flip. People were getting back into real estate after the crash. People thought you were greedy. They thought you were dumb. They said you're a fool. Real estate just crashed. It's never going to come back. It's still high. You're going to wait. And the same people who waited for the crash, they never got in. And it's crazy to think about how it all played out, but it just goes to show there was opportunity. It's all about what you do with it. They're really going to do a lot of stuff in certain playing fields are going to get leveled, but the fact is at the core level, there's a lot of money. That's a lot of opportunity. You could do something with it. So putting all this together, I just hope you guys are really wise with the investments you're making and the opportunity that you have right now. You don't have to rush. You don't need to make something this year, do it really quickly, because if you really realize what is about to happen here in the next 5 years as this phenomenon plays out, and depending on really what happens in between, I'll keep you guys posted, but it's not about who is going to be in the lead early on, because that's something you've seen during these times, 07, 08, even 2010. It is really about how you position yourself and the stuff that you're owning, because eventually when time goes by, it's slowly but surely, the question is, can you get the same thing at the same price, or how much harder now is it to acquire something? If it's easier to get your hand on money, eventually items are going to get harder to acquire. Now, this relates to the economics of it. This is what I said before. If you really understand this concept, you will be able to make a lot of money in your life. I really think the richest people in the world all understood this concept, and that is purchasing power. It is understanding that money is a store of value. That's what people say with Bitcoin and all of that, but it's understanding what it could get you. And now that's why when I'm looking at all this, yeah, we see inflation and people see it as a term, but you have to understand what's really going on. And this is why we look at all of the global currencies, how the world works, how do these items end up here. Again, this is the fascinating part about economics that I love, because it's like, nothing just showed up here. You really got to think that. I know we get it easy on our phones. You just got to click this video. You even could get information. You could go, but think about the items, the computer you have. It didn't just show up out of nowhere. This is a result of global trade and what is happening, and has been happening for 10, 20, 30 years, even longer. But we've seen, different changes then. And now this is why I'm saying this is what supports the full argument, is understand what's going on with all of these currencies. And this is what I'm even saying now, even with China, because you could go and look at what's happening there, even the Japanese currency, all of that. But we're getting to a point where the dollar is very weak, and a lot of these other global currencies are getting very strong. So a lot of you don't know what that means, or some of you are still trying to comprehend this. And again, it's very difficult to get, but it's saying, how much of the other currency does your dollar get? If the Chinese currency is getting stronger and stronger, that means if you want to buy these goods from China, you need to pay China at any point in your supply chain manufacturing. You are going to convert your dollar for the yuan, and you're going to get less yuan, meaning the prices there are going to be more expensive for you. There's going to be a hit on the conversion rate. And then to the contrary, it's going to be easier for them to buy goods here. But pretty much what's ending up happening here, and this is what I'm saying, is that a lot of these emerging market and countries we buy stuff from, their currencies have been getting stronger and stronger. Again, the story used to be Chinese currency weakening. That was 2015 to 2020, and all of a sudden now it has wiped out all of those weakenings, and now it's strengthened back to that same point. And then you look at all the other global currencies, pretty much you're going to get something where it's a race to the bottom. And I wouldn't be surprised for you to start hearing currency wars in the next 6 to 12 months. That's what they'll call it, or they'll say a race to the bottom. But essentially what is happening here with purchasing power, and this is why you are going to see it in waves as other currencies move, they stay at a little bit, or even sometimes we get in agreements. We even did that in 2016 with China, and we will level out things and kind of say, okay, it's getting out of hand, because they want to prevent that race to the bottom. But what ends up happening is that the prices start getting erratic, and really what it comes down to is what you are going to be owning. And that's why, yes, sometimes stuff with little value will go up and shoot up, but then that's why people start to get worried now. And this is where you start to say, well, how do prices go up? But then why do stocks get worried? Because doesn't that mean their stock price should go up? But what's happening, stocks make money by engaging in business. So when you get this inflationary effect, and then you want to go buy items from China, or you need that, or even then you need debt now. Higher inflation is going to lead to higher yields. Weaker currencies usually offer higher domestic yields depending on the country. That is because there's a large supply, it's easy to get. They're going to charge you a little bit higher interest, or if prices do get too hot like they were in March, they're going to start talking about inflation and say, well, we may even have to raise to cool it down a little bit. But this is how inflation starts to wreak havoc, because you see it starts to connect at different levels. So then that means growth companies that need debt, their debt is going to cost more money. But then also think about it, their items are going to cost more. It's going to weigh on their margins. And that's one thing. Let's say even if your growth was a little bit weird, or you relied on a lot of debt, one thing a lot of fundamental people, even not so fundamental, but just on the earnings report, you want to look at that margin, and this is what's going to start happening. It will start to compress margins. If it changes what products are available, if it gets harder to acquire products, or now the worst thing that could happen was that it affects investor confidence, as you're seeing, because if prices start moving really, really rapidly, again, those currencies, inflation, the price of lumber goes from here to here, price of food, and things start bouncing back and forth, or any inputs that they need for their company, it starts changing what they're able to expect in the future as far as margins and all that, and then it pretty much starts to weigh on guidance. And if that happens for too long, then you start to see those companies get affected. That's why those companies that are more stable, been around, and did good during growth but not as stellar, they get their opportunity now to do good even now in these circumstances, because their business model is usually more fixed, or they've established these supply lines, these relationships, and are going to have some of the more first access to a lot of products and goods, or the basic materials needed. But the point is, right now, I've said this many times, go look at where every global currency is right now. The dollar is inflating. It is getting weak. All this money's in the system. We are forecasting more inflation, and there is going to be more inflation. But now, what is going to be the effect on other countries? It's not as if us giving out all this stimulus. I know we love to be like, no, it's bad, this and that, and everyone's thinking about what's going on here. You're thinking about the people who are working, not working, whatever you want to call it. But at the end of the day, you got to factor in what it's going to do to other countries, and then now the places we get stuff, because America having all this money, this is to make sure our dollars are going to get around there. But what is going to be the effect of some of these countries that are already weakened right now? And then if they start to move or adjust anything, it could pretty much outweigh any effect we do, and then it starts leading to this race to the bottom. But usually what that ends up being is a race to commodity and goods, and that's what you've kind of already been seeing. So I hope you guys are wise with your money. I hope you're smart with it. This was a nice little rant. I hope you get the most from it. This is my quarterly update to you guys, but everything is still in play. The opportunities and investments are still the same. I hope you see how these cycles give different opportunities. Ultimately, though, if one thing I could leave you with at the end of this video is be wise and be smart. And that doesn't mean you need FOMO. You don't need to go crazy. Again, I know I talk about this a lot, and I'm giving you guys this information. I really hope, I don't know if it gets construed like that or not, but I could at least use this opportunity to say you don't need to FOMO into anything. You don't need to be dumb about it. The key here is being wise. So some stuff may be too high, some stuff may be unaffordable. Use the cycles to your advantage, but don't get caught waiting too long. I don't want you to be too timid, but I don't want you to be reckless. So that's what I'm saying. Again, none of this is a recommendation. Option trading, stock market, real estate, everything is not. Don't do it. You'll lose. I say that, but be smart. I really want you guys to do it. Get your own research and do it all. But I really hope you take heed to some of this and get in control of everything mentally. And even then, if you know this is about to happen and you think you're in a position to not be able to succeed, take advantage of it. You can. I'm telling you, I believe in you, and I don't even know you. What does that mean? It's because I've seen it in a lot of people. We have crazy stories in the chat. I've seen it with the people, again, who have taught me a lot of stuff. So you have an opportunity there. It's going to be difficult, but now you know what to aim for. And if you really start saving, utilizing your money, putting it in the right places, set a little bit to speculate, take advantage of some of the growth and what you got in this area. You don't have to bet it all on black, or that, don't have to bet it all on the future, but go with quality and aim. You will run into the opportunity as long as you are getting prepared for it. And maybe you're already prepared and you think you lost the opportunity because prices. Use these cycles and waves to your advantage, and you're going to be good to go. So I hope that helps. If you have any questions, let me know. I love all of you guys. Proud of a lot of what you guys are doing, and I'm excited for some of y'all who are about to flip the switch and get a real opportunity here. And again, I really hope you guys take advantage of it. I think this next year is going to be wild, and the next 5, 10, 15 years after that, I just feel grateful for this opportunity, and I hope you recognize it and have that attitude and can see the positive and all that, baby. So I love you all. I'll catch you guys on a video tomorrow. Let me know if you want a special weekend video, because we are going to have the watch list on Monday because the market is closed. So be safe. Enjoy the weekend. I love all y'all. Let's go.